Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and yesterday we talked about sell rallies mode. We talked about the failure at weekly pivot up at 84 and the impending failure that broke all the key resistance or support areas that we have been looking at. I got my target for the week, which was a trade to lower band. I got a little bit earlier in the week than I was expecting, but that's a nice problem to have. At this point, I have exited my longs, and I've exited my shorts rather. I've exited my shorts, and I'm currently long 43.75. I've taken some profit there. I'm holding the rest. I just want, what my expectation for the trade is a bounce pretty much to where we've already bounced. We just did it in the middle of the night there. We bounced to 52 quarter. The lower band is at 53.37. Very typically, we're in what I call the channel, which is the space between the second standard deviation Bollinger Band and the third standard deviation Bollinger Band. When the market moves down into this channel, the top of the channel, the resistance area of the channel, tends to be the lower second standard deviation band. Okay? A good example of that played out over the course of a few days is gold. Big red day into the channel, and you can see here once, twice, three times that the lower band has acted as resistance. So keep that in mind. That's kind of the dynamic that we'll be looking for in ES. We won't know until tomorrow whether we're on a full-blown lower band ride. The bands are tight enough. They're not tight per se. The Bollinger bandwidth that I follow right now is at 3.73. They're certainly not blown out. They're not 10 or over, which is where they were. Up in this area, we were at about 7.5 to 8 right here, near the highs when the bands were running away from price. They've come back in. 3.74, which is enough to start a lower band ride. So what I want to do is sell rallies. We're still in sell rallies mode. If people are I don't know. I don't look at a lot of stuff outside of, because I think it affects what I do. So I don't know if there's a lot of people talking about V bottoms or anything like that. I think, number one, I think it's too early for that discussion. Number two, I think every low now is going to be, quote unquote, anticipated to be a V because we did a V last year. And I think a lot of people had never actually seen a V before. And it was kind of cool, especially if you were long. And so now everything is going to be a V because they want to predict the next V. I think the more reasonable expectation is to continue to sell rallies. What you want to look for is, when do the lower lows transform into higher lows on longer term time frames. Eventually the stairs are only going to go down so far. Then you're going to see rallies still be sold. We're not going to make much progress, but you're going to see little higher lows. That's indicative that the low, wherever it may be, is most likely the low for this particular move down. Okay. So anyway, that's what I'm looking for. A couple few days in the channel. We'll answer the band ride question with tomorrow's trading. Expect the upper level to act as resistance. If it breaks above the upper level, then you have to look at the area of the 50-day exponential moving average here at 63.5 as the next area of a potential rally sell. It was support Friday and Monday. All right, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. Crushed it short yesterday, got long. It was a fantastic day. Come see what we're all about. We would love to meet you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.